reverse mortgage is a way for Canadians to access the equity accrued in their homes, especially when they need cash and their options are limited. But there's a lot to consider before taking out this type of loan. Here to talk about this is Peter Stashecki from Everything Financial. Good morning. Good to see you.
Good morning.
So tell us a little bit about a reverse mortgage here. How does it work?
It's a way you can access equity in your house. So say you're retired and you're finding things a little tight, but you're living in a nice house that you own. These companies allow you to get access to your house, but without making payments like a home equity line of credit, they just add on the payment to the equity that you've borrowed. So allows you to kind of rent out a few rooms in your house and continue to enjoy life.
Yeah, absolutely. It sounds like it's something that a lot of people consider, especially if you're retired or you're at a certain point in your life and you've maybe have the equity already in your home. So what do you need to consider before taking out a reverse mortgage then?
Well, how much do you really need, and is it the right fit for you? Because there are fees to set it up, and there are penalties if you cancel it early. So like everything we've talked about on these segments, is you really need to get full disclosure and know the pros and the cons. And some companies provide better rates and better access and lower fees than others, but they can be quite beneficial. But look for the amount you need to make your life better.
So what are some of the risks associated with taking out a reverse mortgage then?
It's really comes down to penalties, really. If you get it and then you maybe haven't thought it through properly or looked at with your financial advisor all the pros and cons, and you go to cancel it, the penalties can be quite high in the early years. So like everything, that's what you want to know is have full disclosure and make sure it's for you.
So where do you get a reverse mortgage from? Is it through like a financial institution, a place where you might get a mortgage from?
There is specific reverse mortgage companies. Some of them advertise on your station like CHIP, and they do great jobs. A mortgage broker has access to this as one of their products in their arsenal, and they can recommend the right one for you and just say, hey, this amount of money allows you to spend X, makes your life better. Because one of the keys is, especially for older people, the longer you can stay independent, stay in your home, the better. And if this allows you that comfort to stay in your residence and enjoy life longer in your retirement years, why not look at it as an option?
I know a lot of people think that it's a great option to be able to stay in their own home. Are there any other alternatives to a reverse mortgage that people might consider?
Well, there is the home equity line of credit, but that requires you to make a payment. And right now in this time we're in with these lovely interest rates that you and I talk about all the time, that's not really the best benefit, because the payment from the investment, if you take out that money and you invest it, the payment could be considerably higher right now than what you can generate from the investment. So in this case, in a lot of cases right now, the reverse mortgage gives you a little more security and a little more stability with a fixed rate and less risk on the investment side to just make things a little bit easier.
Yeah, it sounds like a great option for a lot of people, but still something you want to talk to your financial planner about just to make sure if it's the right fit for you.
Yeah, get the financial advisor and your mortgage broker, who a lot of times are part of the same team, both on the same page to discuss it with you before just taking that leap forward.
All right, good information this morning. Thanks, Peter.
Thanks, Carrie.
Peter Stashecki, Everything Financial this morning.